and no.
And
I'm not
we're not even
stepping
close
in
to
that.
that.
Yeah.
We're not even considering that
Yeah.
as an option at this point.
Right.
So for all the housing market crash YouTubers out there, hopefully you just go and hear it from the Fed that it no longer becomes a debate on, is the housing market going to crash?
Right.
Like, we've got to get off of that. You and I have been saying this for 2 years since we started the show.
Well, nobody wants to read about the housing market's going to normalize. Like,
you're right.
If I saw it, I'll be like, oh, okay, great, cool. Keep it moving. What's Kanye doing?
So let's talk. Yeah, exactly. He's been in the news a lot. So let's talk about the housing correction or the housing market normalizing.
Yeah.
I want to give the audience context.
Yeah.
All right. So number one, home sales, they are down 20%. This is simply a result, from my position, on mortgage interest rates rising, slowing down the demand of buyers.
You're referring to transactions, right? The number of sales is going down.
Month over month, just down 20%.
Yeah.
You tell us about mortgage applications, because you control, you being the mortgage guy controlling the demand, me, the real estate guy, controlling the supply. So it's kind of a cool thing. I just thought of that just now, by the way. So walk us through the demand from your point of view and applications and how much it's slowed down. Give us some context.
Well, it's in a, we're dealing with a really well-informed consumer, right? Which is fine, which is great. Like that, it actually makes our job easier. The hard part is that when you're well-educated and inexperienced, sometimes is you end up in an analysis thing where you're kind of like, and just to put it in an example. So I had a closing today who yesterday called, and their agent called me and like, I think we're going to back out. She's like, my client's freaking out because they're seeing more and more homes that they like more than the one they're under contract to buy coming on the market for less money. So there's a lot of that, that I'm seeing right now where people are just like, I'm going to wait. Like people are being patient right now, and they understand. And I don't know if it's because we've seen enough economic cycles or because so many people have refinanced in the last 24 to 36 months that they're like, interest rates are going to go down and we'll just wait then to buy a home. So it's just a holding pattern.
So let me interject there for a second. The waiting, I have never been an advocate of trying to time the market, which you and I've talked about. However, I do want your position on this now, because based on the data, not my opinion or the emotion, one could argue that waiting is better because of what we just talked about a minute ago. You don't have to agree with that. I want to unpack this from your perspective, that interest rates right now are roughly what on a 30-year?
6 3/4.
Okay. So, and you saw upwards of 7% a couple weeks ago, right? Yeah. So if I'm a buyer and I'm saying, okay, I'm going to wait because interest rates are going to come down, what is your level of certainty that they will, based on historical data, given that when we get deeper into a recession, mortgage rates do, in fact, come down? Yeah. And so your position on people that wanting to wait, what are your thoughts on that?
Well, I'm in the business of getting people in homes.
Well, of course. Yeah,
so I'm like, let's go.
No, I get it.
No, but I
objectively speaking, without bias.
Yeah, I mean, so again, and I alluded to this before, you can't predict anything. Like, I can't come out and say rates will go down. I do believe they will.
It's not will or will not. It's likely or unlikely.
Yeah, so it is highly likely rates will come down. And my opinion on it, though, is that based on my business, that's what I look at, right? Like, you can have all the data in the world, right? But looking at my business, I have people waiting. There's a group of people that are waiting to buy houses for when rates go down. And I tell them that's great. Like, because the most important thing is you make your own choice. Like, it's up to you when you buy a house. But if you're waiting, like when rates are high and demand is coming down, you are going to pay a better price. If you're waiting to buy a home based on the interest rate and you can afford that home today, and you think interest rates are going to go down, we can refinance you. And it is not a big deal. Like, refinancing is easy to do. And even in a market where you're seeing home prices come down, I mean, I think we saw in July, we saw them come down like 1.05%. And then home prices in August came down, or September, or whatever it was, came down 0.98%.
Prices are actually up as of last month.
From last year, year over year. So overall, year over year, but they've come down some this year.
Yes.
But it's like, there's no, like, there's still a massive, and again, we go back to looking at like where buyers are coming from and like birth rates, like going deep into the data.
Yeah.
And so I'm of the position, like, if I'm renting or if I'm in a house, like if I want to move, like whether it's a need or a want, right? It's something that, like, because nobody really has to move. Like I have seen, I mean, I had a rental. It was 900 square feet with 3 kids and 4 Rhodesian Ridgebacks there, you know? So like people can live, like you don't have to move, right? You can make anything work. But if it is in your mind that you are going to move, my advice to people is move now. Like you are going to get a better price today, I believe, than you are going to get in 6 months when prices go down.
All right. So let me give you, and this isn't necessarily my position. I'm going to argue that point from a different point of view. So with the housing market or prices specifically, when we talk about prices normalizing, when we talk about the market correcting itself, that suggests that home prices are going to go down. You agree with that?
Yes.
Okay. To which amount is the next question you have to unpack. So let's talk about that. What has occurred over the past 20 months as a result of the pandemic and the lowest inventory in combination with the lowest interest rates have drove home prices up in some markets 25, 30%.
Right.
The correction suggests, just to your point, that they will go down. Some say 10%, some say 15%. So the average price of $407,000 right now, some would argue that in a year from now, that same home will be $370,000.
Yeah.
And those same people would argue, Steve, that instead of an interest rate being of 7%, that it might be 4.5%. Instead of the house being $400,000, it's $370,000. Why wouldn't I wait for that?
Because you don't know. You know, if I want, and that's just my perspective is if I want to move, you want to make a move. But the median home price of a home in America today is $440,000 per the St. Louis Federal Reserve. Yeah. And last year it was like $424,000, right? So the big increase took place from 2019 to 2020, right? Yeah. That was it went from $260,000 was the U.S. median home price in 2019.
But we know why that happened.
Right. So there's that massive demand. The problem, my thing that I keep seeing though is that there's not, like, construction never caught up, because that's the new construction never caught up. Like the ranch condos that we've talked about never got built. Like there's still a big amount of demand for housing, and it can turn fast. When rates go down, there's just a large pool of buyers ready to purchase those homes. And we know, I think there's a higher likelihood, in my opinion, a higher likelihood or a higher predictability of interest rates coming down at a greater clip than home values coming down.
So, to be clear on this little mini debate, which is fun, is there is no such thing as an absolute in statistics.
Right, for sure.
It's just what is more or less likely to occur.
Yeah, exactly.
What I believe is more likely to occur, because we've seen, well, before I give you that, are you suggesting that home prices have more room to breathe, that you believe that home prices will that will go up from here?
So, I mean, all the data shows that we're going to see much more moderate overall home value appreciation.
Do you think there's a retraction at all? Do you think that prices right now that are leveling off?
Yeah.
You're right, but the question is not the leveling off. The question is, okay, the average $440,000 home, or my data is from Redfin. They all have different information. $407,000, whatever the average price is. The question first for us to unpack in the debate is, do you believe it's more likely that home prices will in fact correct, which suggests down, or stay the same?
So I do think they will correct down, but I don't think the correction will be that much. And I tell you, and I say that again, just seeing, I always look at what I see, right?
Me too.
And so, I mean, I'm still having like properties, like nice houses that you're like, wow, that's a lot of money for that. And these houses are still getting multiple offers.
Yeah.
Like I'm getting like multiple over ask cash offers in bigger numbers, for the houses that are ready to go, you know? And so,
but at the same point, price reductions are the highest they've ever been in years.
Yes. Yeah.
And more homes are expiring, not selling at all.
Yes.
So it's the chicken
in
and the
higher
egg.
ranges,
Yeah.
in those higher price ranges. And you look at, if you really dig into the data and look at what's driving these home price decreases, if you look at those markets, it's your last month, the biggest decrease came in San Jose, California.
Yeah.
Second was San Francisco, California. Third was Seattle. And then you have Miami, who's still going up in that high end price range. You know, so it's hard to find what that middle ground. It'll be interesting to see what happens to that average U.S. median home price. But I mean, a lot of the transactions I'm doing are still above that. And maybe that's just my clientele, you know, outside of like investors that I'm working with. But I do see a correction coming. Like there will for sure, home prices they're going to come down some, but I don't think it's what everybody's looking for. I don't think it's going to be that massive drop.
Well, all right. So that's what I want to talk about next. All right. So thanks for your political answer.
Yeah.
You still didn't give us an answer, Mr. Politician.
Yeah.
I'm just kidding. So watch this. This is where the next piece of this conversation comes in with what is the massive drop. We have to put context around that. All right.
For sure.
So because of the pandemic, the home prices shot up 20, 25, 30%. Like we've never seen home appreciation in this country before, ever.
Right.
The correction is just it's gonna erase that gap. That's all it's gonna do. Let me give you context. Context here is this: the average home price before the pandemic hit was $327,000.
Yeah.
Then in 2021, it went up to $380,000. Then in 2022, it went up to $407,000. Okay, so that's a huge, massive number. Now, I believe we're going to see a 10% correction. Context matters. That means that the home that's worth $407 now, maybe this time next year is worth $375. Here's the context. That home is what it was worth in 2021, and it's worth more than it was worth pre-pandemic, which suggests normal home appreciation, pretending that the pandemic never happened. That these homes in the last 2 years would be worth $375 from $327, not $400. I believe that's where we're going to settle in. And that interest rates settle in at 4.5%. It's more of a neutral market. It's not a buyer's market. It's not a seller's market. It's a neutral market, meaning inventory levels match that of demand, that the buyers and sellers are equal. And so that's, I think, what will happen to prices. Now, let's go back to your conversation about demand. So when we look at demand, we say, okay, what is the average days on market? How fast are homes selling based on that demand? Okay, context. Right now, we're sitting at 26 days on average. Sometimes homes sell in days, and sometimes they take months. Giving context, 2021, this time last year, when we had the hottest real estate market of all time, it was 17. So it's 9 days more on the market. Give you more context, it was 32 pre-pandemic. So even if we retract the time now, even with interest rates at 7%, homes are still selling faster than they were before, to your point, which means people are still buying. Demand is still strong. And so it's not this huge dip, to your point, which is great. And then the other thing is that you brought up is list to sold price ratio. Meaning if a homeowner lists their house at $100,000, how much are they getting on average? Right now they're getting $100,000 on average, which is phenomenal. Meaning seller wants this, seller's getting it. With interest rates at 7%. Last year they were getting more than that. On average, homes were selling for 102%. Pre-pandemic was 98%. So when we talk about the market retracting or correcting itself, when we hit this new baseline, that baseline, I believe, will still be better than we were at 2 years ago. And by the way, the market 2 years ago, nobody was bitching. It was phenomenal. Great real estate. It's going to be better at baseline next year than even that.
So the reason the argument again, and it can go either way.
Don't get sad. It's all right.
No, it's okay. So, but my thing is that, so if you're talking about you're talking like $27,000 decrease in, like, you're going to save, right? You're going to save $27,000 on your purchase price after what, 6-8 months, whatever it might be. The problem is
not
that
if
you're
don't
waiting, whatever it is. So if rates go down, right? So and you're going to say, okay, well, I want the property to be $27,000 $27,000 less, and then rates will go down to 4.5%, and then I'll buy that house, right?
Okay.
So that change in purchase price, that $27,000, to put it into a monthly payment perspective, is $125 a month.
Okay.
Right?
Yep.
The difference in that rate change from 6.5 to 4.5 is 2% on, let's just say $350,000. That's $7,000 a year, $350, or $7,000 a year is what, $600 a month.
Okay.
Right? So the thing with waiting, you're not the dollar, because when the rates get down that low, that demand is going to come back up.
Yep.
So that value, that correction that we had is going to get soaked up with this demand for people that have been waiting to buy homes.
That's a good point.
At lower rates. If you can buy, like, I think for negotiating price, and people that have their house listed right now, knowing everything they know about the market, we're heading into the best time to get a great price on a home. As these rates crest and start to come down, people are going to start entering that market, and it's going to become more competitive. And there's enough control for foreclosures and enough control for things that there's not going to be a massive influx of inventory. So still having that smaller inventory, days on market are still very low.
Yeah.
And then all of a sudden now you've got all these people that are like, oh, rates are low again, I better strike now. You think that all these people that didn't get their offers accepted the last 2 years because you had to have a $150,000 appraisal guarantee, you had to give them a cat at closing and do all this stuff.
Yeah.
All those people that are missed out are pissed off. Now rates are up. They're like, I'm not buying now. And what do you think they're going to do when rates go to 4.5%? They are going to come out swinging
because they have context. They have something to compare it to. It's huge.
So
it's a massive
I
point.
think,
look at you.
If you go back, so now look, if you buy a house now, say maybe you pay 5% more than they'll be worth in 6 months. Sure. But if rates come down 3%, now you've got a lower. You ended up in a better place in the purchase. I don't know.
That's a great point.
If you can afford the payment today and you have the need to move and you can get a price in an area that you like and it works for your family, buy a house, because the opportunity to refinance will come back.
That's true.
But the problem is when that opportunity to refinance comes back, so is the demand for all these people that are pissed off they didn't get their house because they didn't have the money for it.
Yeah, and I agree 100%.
Yeah.
Spot on.
Thanks.
It was a really good point.
I was almost sweating.
Yeah, I had you sweating with that
just
debate?
a little bit. No, I just
right.
was getting all jacked up.
So the next thing, to your point, though, is inventory. I mean, that is this thing, right? So it's mortgage interest rates and inventory, the supply and demand, right? Well, last month, 589,000 new homes came into the marketplace. Now, let me give you and the audience some context of what that means, right? Without comparison, you don't know. Last year, this time, it was 729,000 new listings came into the market. Pre-pandemic was 725,000. A lot less homes are hitting the market right now, probably because what you said earlier, because these people are just, again, trying to wait it out. And so the other argument is that if rates start to crest and then more sellers get off the sideline, they start to list their home. Now you have more to choose from, right? So it just equals things out, I think.
And that 589,000 number, there's a kind of a funny background to that too, is how many of those homes are completed. Because how many listings do you see that you're like, this house is sick. Yeah. I'm going to go, to be built. Come on. Then you know the price that it's even listed at is probably 30. I know this because of the situation I'm currently in. Yeah. That listing price is probably like 30% less than what you're actually going to pay for that house.
Yeah.
You know what I mean? So it's the completion numbers are kind of interesting when you start to look at that, because there's so many builders just have land and they list it as a complete, like, it seems like it's a completed home and it's not.
Yeah. Well, and so now talking about the driver of home prices specifically, we talked about demand and mortgage interest rates. So now let's further unpack inventory, right?
Yeah.
So this is why people may want to wait, and you don't agree with that maybe, but what they're looking at is the data. The data suggests that inventory is up 14%, meaning there's over 1 million homes for sale right now, where we haven't seen that for a while. Last year we had under 1 million. In 2020 we had under 1 million. You had to go back to 2019 to get over 1 million homes for sale.
Yeah.
And so if that number continues to creep up, it will drive the price of homes down.
Right.
And so this is what we're going to have to look at next month as we get into the October numbers. That's the number we have to pay attention to in addition to mortgage interest rates.
I agree with that 100%. The other thing to concentrate on or look at with that number is, number one, that includes homes under contract. So that you could have, usually in the last few months, about 40% of the active inventory is under contract, which is kind of interesting.
Right.
And we're coming off of the highest inventory months of the year. So this is normally the peak of inventory.
Yeah.
So again, and it all plays into the numbers. And it's still, like I said, buyers are because buyers are paying more. Like if you go out and you buy a nice suit coat, right? Like you are going to be much more picky about your fabric.
You're suggesting
you're
this is a nice suit coat?
I love that. It's a beautiful coat. But you're going to be much more picky about your little buttons and all that kind of thing if you're paying a lot of money for something, or if you're paying at the top of the market. Yeah. So buyers are getting more picky, and we're seeing that now. There's no doubt. Big time more picky. Yeah. So that's something. The inventory will help with that, but I think that as the months we're on, I don't think that especially if you back out homes under contract and completed homes, it'll be a really interesting number if you can back all that out and see what's actually out there.
Yeah. So we'll see what happens. Obviously we have the Fed's meeting in November 2nd. And December. Yep. And so everyone is under the belief that they're going to raise another 3/4 in November. And
people are pissed.
Oh, they're pissed.
Not us.
No, right.
So if you look at one thing, and this will be my last rant, but something really interesting that's happening outside of the United States, and it's great that we're insulated from it, is as the Federal Reserve starts to raise rates, the dollar becomes more and more valuable. And something you have to think about is that a lot of Europe has really focused on renewable energy resources and these types of things. Well, so what they did was essentially they became very reliant on foreign oil and foreign gas. So what happens is now they're cut off because of the war in Russia. And so they're now purchasing barrels of oil from the same sources the United States and things like that are. Well, oil is all traded in dollars, right? So in order to buy, if you live in Germany, you have to take I don't know what a German, I don't know what a German money is.
I don't either.
You got to take your German dollar.
Yeah. And
you have to convert that into American dollars. Well, if a German dollar is now worth, you get one German dollar gets you 80 cents American. Well, think now you're at a 20% increase on already record oil prices.
Yeah.
And that trickles all the way down to a lot smaller countries have to convert their currency, which is much weaker than the dollar, because as we raise our interest rates, the dollar becomes more and more valuable. So that's why you've seen one thing that there's some articles that said, for the first time in 6 weeks, 30-year rates have come down. And that's because the UN actually came out and said to the Federal Reserve, you guys have to slow down on raising rates, because the dollar is so strong in all these other countries that they're literally we're taking this massive global recession is looming because we're continuing to fight our inflation at such a high level. It's kind of crazy.
Yeah.
There is a whole, I won't get all the numbers right, and you guys can do this. It's called interest rate risk, but there's a lot of in Europe with purchasing bonds and things like that, because buying American bonds with euros, right? So a euro, you would get $1 in American, or €1 was $1.21 in American. So you could take your euros and buy mortgage or U.S. debt, right? U.S. bonds, and you're going to get, $1. You get $1. €1 gets you $1.21 to invest in the United States bond market. Well, now that is your $1.21 is now worth 96 cents.
It's inverted.
So so when you get your money back, you're actually losing all these investments these foreign countries have made in American bonds. They're all losing money because our currency is so much more powerful now.
Yeah.
So it's really, it's going to be an interesting couple months to see what happens globally with oil supply and OPEC just turning it down 2 million barrels a day. We're going to see when the Fed said there's going to be some pain, it's in America, we have it pretty damn good compared to what some of the rest of the world's going to see.
It's a great point. And it's going to, the other big driving factor that I'm looking forward to is what happens in November with the elections.
Yeah.
That's one variable that will, I believe, have a huge impact on what happens for the remainder of 2022. You agree with that?
100%.
Yeah. Do you have any thoughts on who is having a housing market crash is China? Do you have a thought on that?
No, I don't really. I don't pay any attention to it. I couldn't speak on it.
You don't write mortgages in China anymore?
No, I quit that.
Okay.
But I've had to document mortgages for people that had a mortgage in China, which I'm like, why did you disclose that?
Right.
I mean, we always do the right thing, but I'm like that. It is so, you make one payment a year.
It's crazy.
You save up all your money all year and you make one lump sum payment.
That market's collapsing.
Yeah. China, I mean, all of that, again, all these global economies right now are all feeling this.
Yeah.
And I mean, China, you have to think they have the zero COVID policy there. They literally shut that country down with a couple cases of COVID where in the United States, we're like, you don't have to wear a mask anymore.
Right.
You know? Or if you think about Formula One in Japan. So I was watching
know.
F1 today.
Yeah.
Everybody wears a mask. There's still, it is much
lockdown.
It impacts them much more, but the populations are just so dense there that it's easy for that stuff to spiral out of control.
Yeah. So, all right, last question for the show. Is Max Verstappen going to win the championship at the Japanese Grand Prix this weekend?
It's not possible.
Why?
They said that this morning.
In the pre-show?
Yeah, he wouldn't be able to win it until he was in Austin.
Because
there's no point combination where he could leave more than like 113 points ahead. He could be like tied for it, but he couldn't guarantee the win of it.
So the question then is, when are we leaving to go to Austin?
Well, it's going to take us 3 days to get there based on how much water and coffee we drink. So.
Yeah. So listen, thank you, dude.
Get that dialed
this is your official September 2022 housing market update. If you guys have questions for Steve and I, just put them in the comments beneath this video, and then Steve and I will circle back in the next couple of days, answer those questions. We'll see you guys back here in a month's time. Thanks for watching.
Thanks.